Hello everyone, we are back with another episode on Rupee Outlook. What are its key triggers for the month of December? So let's start. But before I start, I would like to request you to please hit the bell icon and subscribe to our channel for more updates on currencies and commodities. Now let's start. First, we will see what's the performance of the rupee so far since 2022. What we have seen is like rupee has been the most stable currency among its Asian traded currencies, where we have seen the rupee has depreciated only by around 0.7 to 0.8% as compared to the most traded currencies, primarily because of the low volatility, as has been the RBI has been very active in containing the volatility in the rupee, has also been there, has been successfully managing the rupee on both the sides by actively intervening in the NDF markets, in the spot markets, as well as in the currency futures. We have seen the volatility, the implied volatility and the realized volatility have been the lowest since 2007 in the rupee this year. So that has also been weighed on the rupee, and the rupee has traded in a very narrow range in the past 4 to 5 months. Falling forward premiums is because of the dollar liquidity crunch is also have been there and have been weighing on the rupee part. Now let's go ahead and look at another part is like what's the seasonality in rupee is there. As far as the seasonality in rupee is concerned, in the month of December, the rupee has always been on an appreciative mode. Like what we have seen is the performance of the Nifty in the month of December have also been quite positive in the last 25 years. As almost 16 to 17 times the Nifty has remained in a positive territory, while rupee in the last 10 to 11 years, there have been almost 7 instances where rupee have been on an appreciative side. So this is about the seasonality pattern of rupee. Now coming to the next part is like the FII inflows. This year, in the first half of the year, FII have been quite robust and have driven quite a bit of inflows into the market, which have been a major positive factor for the rupee. But now, in the last 3 months, there have been consecutive selling by the FIIs, but that has also been stabilized in November, where we have seen some inflows coming in from the FII side. So that has also lent some support to the rupee. Now, going ahead, what we are expecting is like what are the key triggers for the December month, the positive catalyst as well as the negative triggers. Let's see the positive catalyst first. The US interest rate scenario, where most traders are highly anticipating an interest rate cut in the first half of the next year, probably even in the first quarter only. Because of the cooling economy, because of the impact of higher interest rates, as well as the cooling economy, the weaker consumer spending and moderating jobs growth is what is driving a concerns of an interest rate cut is leading to a weaker dollar. Also, we are seeing cooling inflation in the US because of the impact of the high interest rates. That is also leading to a weakness in the dollar index, and the falling US treasury yields, especially the 10-year yields from above 5%, is what is like we are expecting that it might have peaked in the current quarter. Again, as far as the domestic sentiments are concerned, because of the Indian state elections results, which will be declared next week, may be expected to drive some positive sentiments because of the central ruling party expected to gain majority in most of the states, as well as the gross domestic product in the third quarter have been quite robust, 7.6% of second quarter of FY24. This is well above the estimate of RBI 6.5%. As well as what we are seeing is the falling trend in the crude prices because of the negative bias persisting, as well as the fall in the dollar index that is also supporting the rupee. On the negative side, rupee have been quite trading in a narrow range because of the active RBI interventions also, and that is also the falling implied yields and the concerns of some FII outflows towards the end of the year is what could drive volatility in the rupee. Overall, if we see the outlook, on the dollar index front, what we are expecting is some kind of sideways movement, as well as rupee is expected to trade in the range of 82.80 to 83.50 for the month of December. So this is all our outlook on the rupee. I hope you have gone through all the updates, and we will be coming up with more updates on rupee in our upcoming videos. So thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.